I think that it could only be the beginning of a rally. Of course, we could always have a correction. We could also have some consolidation here. But other than that, I do expect this rally to continue, years into the future.
The way I see it, this could really be a problem. If you're going to get some arbitrage, you're going to get some profit for people who can ship silver from New York to London. So they would do that. If for whatever reason they don't want to, tariffs or whatever they think, I don't know what the reason would be that they can't. But if they can't or they won't, then there's going to be some serious problems, and then you would see backwardation in both markets.
The question of whether we're entering the endgame for the global financial system has never felt more pressing, and according to Rafi Farber, also known as the Silver Hermit, the answer lies in the accelerating breakdown between paper promises and physical reality. Farber argues that what we're witnessing today isn't just a cycle or correction, it's the culmination of decades of monetary manipulation that have hollowed out the integrity of global markets. The widening disconnect between the price of silver on paper and the real-world scarcity of physical metal is the ultimate warning sign. As central banks scramble to contain inflation and liquidity dries up, silver is emerging as the canary in the coal mine, exposing how fragile the entire structure of fiat finance has become. Farber explains that the relentless suppression of silver prices through leveraged derivatives and short positions is reaching a breaking point. With industrial demand soaring, from solar energy to electric vehicles, the stage is being set for a structural shift unlike anything seen before. When the physical shortages finally overwhelm the paper markets, Farber believes the reset will be swift and brutal. Contracts will default, trust in COMEX will evaporate, and the price of physical silver will reprice overnight to reflect its true scarcity. He emphasizes that this will not be a market event in the traditional sense, but a monetary awakening, one that forces the world to confront the consequences of decades of artificial pricing and economic illusion. Adding his perspective, Orin Elbaz shares a similar but even more global outlook. He argues that the ongoing de-dollarization movement, led by nations like China and Russia, has accelerated the rush toward hard assets, leaving Western financial systems increasingly vulnerable. Elbaz points out that both gold and silver are no longer just commodities, they are becoming strategic tools in the emerging economic order. As fiat currencies lose credibility, he expects to see governments and central banks quietly rebuilding their reserves with physical metal, not just as insurance, but as leverage in future trade settlements. In his view, silver's historical role as both money and industry's lifeblood gives it a dual importance that few investors fully appreciate. Now, let's dive into the clips to hear these insights firsthand. Don't forget to like and share if you find this valuable. Your support helps spread the word.
$50 silver and $4,000 gold is the end of this rally. As a matter of fact, I think that it could only be the beginning of a rally. Of course, we could always have a correction. We could also have some consolidation here. But other than that, I do expect this rally to continue, years into the future.
Do you think that if we break decisively above 50 and let's say we run a bunch of not stop, what's the opposite of stops? Buy stops or buy triggers, whatever, we could just like break through. If we break through 45-year resistance, we could get to 60 in a matter of days or weeks. And if that happens, then you could have the public waking up. If the public wakes up and starts to worry, then that's the end. Because the reason I'm saying that is that we might be far away from a top in terms of numbers, but in terms of time, I don't know. Because the way I see it, bank runs happen faster and faster and faster because the ease of moving credit is so exaggerated now. It's exaggeratedly easy to move any amount of credit anywhere in a second. So you could have a situation theoretically. I'm not predicting this, but if this happened, I wouldn't be like, oh my gosh, how did that happen? If silver hits like say 50, 60, and then all of a sudden there's a panic and then it hits like, I don't know, 400 and then nobody can get any and then that's it. I mean, I'm not saying it's going to happen, but I'm saying if it did, I would understand why it did happen.
In other words, you're asking whether it's the end game for the dollar. That could be the case. That could very well be the case because we've seen each with his own method of analysis we've seen how both gold and particularly silver can absolutely go berserk. They have this unlinear, they're not linear assets, and they don't behave in a normal way like stocks or bonds do. They can simply start running very rapidly. It has happened already, several times in the past. We could see this happening yet again. And yes, one thing leads to the other. This could eventually topple the entire financial system and also all fiat currencies throughout the world.
Okay, and what about your thesis that silver is going to be forcefully mined no matter what the price? Where does that play into this? And given that that's still the case, and I think we still have to deplete, we have to still deplete some of the silver stockpiles that are above ground in order for that to be, for that factor to be canceled out, right? I think
Yes.
that was your thesis. How far are we from there? How much more silver do we have to burn through?
Well, we don't know the exact numbers, but the thesis was, as you said, that the industry is going to be forced to go on mining silver no matter what until we reach a shortage. I mean, since it was so uneconomical to mine it, because mining companies lost so much money mining it below its true value, they lost money over the ages, over the years, and so they had no incentive to increase their operations. And this is why we eventually got to a deficit. We're at the fifth year of a deficit now, and sometime in the future, this will lead to a shortage, a physical shortage. Now, are we there yet? I don't know. So if you would let me get into the LBMA vaults, for instance, and inspect their inventory and start figuring out how much of it belongs to the ETFs and how much of it belongs to private people or foreign governments, and how much free float do they really have, I could perhaps tell you if we are at the end game, yes or no. But it appears that we're getting close to that end game.
So then maybe, even though the dollar is on a gold standard, not statutorily, but still it is, because there's no other way to have any prices that make any sense, the endgame signal could really be in silver and not in gold. I mean, what it ends up being, I guess we'll see when it happens. It's going to be in one of the two. It's not going to be in Bitcoin. So either silver or gold or both of them are going to go crazy. Which one's going to go crazy first? I'm not sure. You had said something that about silver backwardation that I have a different view on, and then we'll get into Japan. What is happening? You spoke about the LBMA. So is there a shortage going on in the LBMA? It seems that we're getting pretty close to that because silver in London is more expensive than spot silver in London is more expensive than future silver in New York. Now, I don't call that backwardation because they're slightly different goods, especially according to Mises, who holds that even if it's the same good, if it's in a different place, it's considered, in terms of Austrian economic logic, it's a different good. So while backwardation would be New York present silver is more expensive than New York future silver, that would be backwardation. We're not there yet. But the higher spot goes in London relative to New York, I'd say, yeah, that is the signal of a shortage. You don't have to know how much silver is there because the price is telling you. The way I see it, this could really be a problem. If you're going to get some arbitrage, you're going to get some profit for people who can ship silver from New York to London. So they would do that. If for whatever reason they don't want to, tariffs or whatever they think, I don't know what the reason would be that they can't. But if they can't or they won't, then there's going to be some serious problems. And then you would see backwardation in both markets. So we'll see if New York can ship to London at all, or if they can ship enough of it. But right now, that's what has to happen.
Both Farber and Elbaz agree that this transformation won't happen smoothly. The collapse of confidence in paper assets will trigger widespread volatility, banking strain, and social unrest. But they also stress that those who understand this transition early, who hold real assets instead of paper claims, will not only preserve wealth, but gain a form of independence few others will have. Silver, in particular, represents something deeper than profit potential. It symbolizes a return to honest value in a world addicted to financial fiction. The real wealth of the next era will belong to those who hold what cannot default. Looking ahead, both analysts foresee a world where silver and gold once again define the foundation of financial trust. The coming years could witness the unraveling of the global debt bubble and the rebirth of sound money principles. Farber envisions this as the Great Revaluation, a moment when the illusion of infinite credit gives way to the reality of finite value. Whether it arrives gradually or through sudden crisis, one truth stands clear. The era of paper wealth is ending. If history is any guide, the next system will be built not on promises, but on metal, real, tangible, and incorruptible.
The way I explained it is that the ETFs, if you want to do a silver squeeze, now would be the time. All you'd have to do is buy a bunch of SLV, which would force London to put a bunch of silver into SLV from its float. And then if they run out, then the price of SLV, not necessarily silver, but SLV would just like spike because they can't get enough silver in the thing. And then there's a shortage of shares, and then everybody wants the shares and they can't match it with the silver price. So it trades at a premium. That's what would happen if there's a shortage. If you want to,
that is assuming that SLV actually holds the silver that it claims to have.
Yeah.
No, I'm not insinuating anything, of course.
Yeah. Okay. So if it does happen, let's assume it's a kosher fund in terms of it has all the silver that it says it has, then you could pull a 21st century version of Hunt Brothers if there's just a bunch of hedge funds that just bought a bunch of SLV to see if it could stack the silver inside the ETF. And what would probably happen is that JP Morgan would have to take over stacking silver in New York, and there is enough there. So there'd have to be an emergency, like, because London can't do it anymore. So they call JP Morgan, they're like, you have to stack it right now or SLV is going to blow up. It would be something like that. So I don't think it would work, but it would be an interesting experiment.
Yeah, well, it's above my pay grade,
Okay, so you wanted to talk about the rabbit hole that you found in Japan and what that means about the Japanese monetary system, why Japan is the fulcrum. Let's say the way that I put it on Endgame Investor is that the relationship between the US and Japan is basically the relationship that it's been keeping the fiat dollar-based monetary system alive. It's one of the central points. I wouldn't say it's but it's one of the big joints of the system, because America nuked Japan in 1945 twice, and then Japan basically became the dollar's bitch ever since, and it's been that way. So they're taking Keynesianism to the logical extreme. That's what Japanese people do. They take everything and then they make it really extreme and either like completely perfect, like sushi rolling, or that art where they take broken teacups and they put like gold glue and then make it really beautiful, or everything they do is very exact. So they're taking Keynesianism very exactly here and very extremely. Well, we started at in 1980, it was 50.6%. That's why I say that the gold and silver spike of 1980 cannot be reversed this time if it happens. If the equivalent of a 1980 spike happened in gold and silver, it can't be reversed now, because back then it could be. Even Japan was only at 50.6% debt to GDP. Now it's at 235. So also, if you look at the prices in, where is it, inflation rate, right? Let's look at food inflation in Japan, right? So we're at 7.2%. Right. And if you max it out and you see what the trends are, we're still at the highest pre-COVID level from 1980 to COVID lockdowns. We're still at those levels. And this is food. This is basic necessities. Once these numbers start to go like up here in the 1970s, and they've been there before, like that's going to be the panic, because people are going to want food. So let's see, where are we in Japan? Is this the end? What do you think?
Well, the thing is about Japan, as you said, they've taken to the Keynesian playbook to the extreme. It began with their real estate bubble. They had a real estate bubble in the late 1980s, between 1986 and 1991. And when that bubble burst, the Bank of Japan was the first one to, cut rates, practically very low interest rates since 1995, and they were the first to embark on QE, money printing. They started that in 2001 before any other Western central bank. So they're further down the line. I was expecting them to blow up first. So we've had all sorts of crazy things happening in the Japanese economy. They had extremely low interest rates. The 10-year Treasury rate yield was kept at practically zero for a number of years.
So this that I'm sharing now is the Nikkei 225, I think it's called. So the stock market in Japan has been going vertical since March 2025. This is not a good sign. This is
It's
a sign.
because of inflation, of
Yeah,
course.
yeah, yeah. But so has gold, and it would be interesting to see this chart versus gold. I'd have to jigger that up. It would take me a minute. But if we talk about the extremeness of the Japanese Keynesian experiment, you can see it in the money tab over here with the central bank balance sheet. This is what they do. Let's max this out.
Yes,
See, this is nuts.
it's
Like,
insane.
this is yeah, and you can see here, look at this. Their balance sheet is actually going down now. They're trying to deflate it. You see the last 5 years, they're speeding up the deflation of the balance sheet, which is going to cause some kind of liquidity crunch in yen. But still their currency, if you look at the yen over here you have versus the dollar, it's above 150 again. So it's very, very weak. And if we stretch this out to 50 years, you can see we're at a high, meaning a low. This is the higher the number goes, the lower the yen is versus the dollar. A high since 1990, which is the last time the stock market in Japan climaxed. So it's not a good
The Bank
situation
of
here.
Japan currently owns 53% of all JGBs, compared, for instance, to 13% of the US debt, which the Federal Reserve is holding. So the Japanese central bank is effectively the Japanese bond market. It is de facto the market. It's completely insane.
Looking into the future, both Rafi Farber and Orin Elbaz predict that gold and silver are on the verge of a historic repricing event that could redefine the structure of global finance. Farber expects silver to enter a phase of explosive acceleration where the market violently corrects decades of price suppression, pushing it to levels few can currently imagine. He believes that once physical shortages hit mainstream awareness, prices could skyrocket as industrial users and investors compete for what's left. Elbaz, on the other hand, foresees gold reasserting itself as the ultimate reserve asset, outpacing fiat currencies as trust collapses and global trade increasingly shifts towards settlement in tangible value. Both agree that the 2020s will be remembered as the decade when the world rediscovered real money, and those who prepared early will be the ones standing when the dust settles. So the question now isn't if this reset will happen, but whether you're ready for it when it does. Like this video if you found it insightful, share it with others who need to understand what's coming. Drop your thoughts in the comments section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.